This conference will now be recorded.
All right. In the last session, we created chart of account, three settings. We've created our chart of account. We've assigned our company code to a chart of account. We've defined different account groups, and we have to create now retained earnings account. Before we create a retained earnings account, first let us check what are the account groups that we've created. Where did we create the account groups?
In the table, sir.
Okay, these are the account groups we have created. Now, next step that we are planning to do is creation or the assignment of retained earnings account. Now, did we create any one GL account group for retained earnings? Here is one retained earnings account group, correct? Now, this retained earnings account must be assigned in your configuration. And this retained earnings account, we will be assigning it in OB53 transaction. Let me open OB53 once. OB53. Here we have to give chart of account. Which chart of account we have to assign this retained earnings account? Our chart of account that we created was DEGR. Give your chart of account, proceed inside. It is asking for P&L statement type, and it is also asking you to input the account. This is standard. Your P&L statement type is always X. Okay, your P&L statement type is by default X, and then you'll have to put a retained earnings account GL account. This GL account must be part of your retained earnings account group. Okay, whatever the account group we have created for retained earnings, from this account group, one number must be allotted in the retained earnings configuration. What we will do, we will take the first GL account from this range, 2215 times 0, copy this account. In SAP, put this. Now press enter. When you press enter, you will get a message at the bottom. This is a warning message which talks about you are trying to assign GL account number 22150, but this GL account is not yet created in the chart of account level. Now this is what the message is talking about. We are aware of this, that we are yet to start GL master creation. Ignore the message by hitting enter on the keyboard and proceed to save it. Okay, let's save this. Enter. This is all about your retained earnings account. Now, how this retained earnings account will work, I will explain you once we start posting the transactions. How data will flow to this retained earnings account, we will understand once we are on the data entry sessions. Okay. Now, before we go to retained earnings account posting, first let us try to understand the basic logic of this retained earnings account. Normally, when we prepare monthly financials, you are going to prepare trial balance, P&L, balance sheet, correct? Now, TB must be is equal to 0. Am I correct? When you prepare TB, it must be equivalent to 0.
Yes, sir.
Now, when you prepare P&L, you are going to receive either profit or loss. When you're trying to do the balance sheet, you are going to do assets and liabilities must be equal. Now, for us to prepare a P&L, you will end up getting a profit or a loss.
Yes.
That 99.9% there will be either a profit figure or a loss figure. This profit or loss will have to be taken into your balance sheet liabilities side.
Yes.
Yes.
Now, when you're working in a project, when you're working on SAP, this P&L result, which is your profit or loss, will have to be taken into balance sheet automatically by the system. System will take care of your profit loss figure in the balance sheet liabilities side by way of retained earnings account, which means your retained earnings account which you are assigning in this setting OB53 is updated real time. Okay, this GL account is not going to show any physical balance, but this will always have a running balance. When we say running balance, whenever you post a transaction, balance in this GL account is automatically updated. And whenever you pull the balance sheet, only in the balance sheet you will be able to see the balance on this retained earnings account GL account, not on the trial balance. Am I clear?
Yes, sir.
Right? Now, how SAP will figure out profit or loss amount? How SAP will figure out whether you are getting profit or loss? In short, how retained earnings account balance is calculated. Simple logic. This is a question that you might get in your interviews. People might ask you how system will understand your retained earnings balance. So first point, there is no manual entry for your retained earnings. Second point, this is always auto updated by system, which will always show the running balance. Now, SAP takes sum of all P&L accounts mapped with P&L statement type X. If you look at OB53 screen, you are assigning this GL account against P&L statement type X.
Yes, sir.
Okay, SAP takes sum of all P&L account mapped with P&L statement type X. Whatever the balance comes, that becomes the value of retained earnings. In short, SAP is not going to prepare your P&L statement by writing expenses on the debit side, incomes on the credit side. Instead, what system will do? It will straight away do the total of all your P&L accounts. It will do a sum. Now, when it does a sum, what it is going to do is, let's say it will take something like sales, purchases, expenses, incomes. Now, assuming your sales is, now sales shows debit balance or credit balance.
Credit balance negative.
Sales shows a credit balance, so you'll have to put a negative, let's say 5,000. Purchases shows a debit balance, I'll put 3,500. Expenses will show a debit balance, I'll put
Positive.
1,000. Income will show a negative balance, I'll put a credit balance, minus 2,000. Now, if I do a total of this, we are getting a balance of 2,500, positive or negative.
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 Negative means profit or loss.
Profit.
Negative means profit. This is how SAP is going to identify whether you are going to get profit or loss. System is not going to prepare P&L by way of debit all expenses, credit all incomes. It will simply do a sum of all your P&L values, whichever is tagged with P&L statement type X. We can also have another P&L statement type. Why we will have it later, we will discuss. Now it is not relevant. Okay, that is why clearly we are mentioning P&L statement type X. Now, this 2500 amount will be updated in your retained earnings account in your financial statements. For example, you have changed this expense from 1000 to 1100. Immediately this is updated 2400.
Yes,
Yes,
sir.
sir.
We are not calculating again and again. Let's say I'll put my income not 2000 but I'll put only 1600. Now my profit has become 2000. Similarly, whenever you post any accounting entry to your P&L account, your balancing figure is always updated automatically. You don't have to calculate profit again, you don't have to execute any report again and again. Clear?
Yes, sir.
Now, this is about your retained earnings account. And make sure if somebody is asking you in your interview how retained earnings account balance will be updated, you'll have to talk about these points. So your retained earnings account you are going to use for capturing your profit loss for the year. So system will know the profit or loss for the year by taking the sum of all your P&L accounts, whatever is mapped with P&L statement X. Now one more point, if we have only one P&L statement type X, we don't need to update this while creating P&L accounts. Okay, currently how many P&L statement types we have created?
One, sir.
Only one, which is X. If your retained earnings account is only a single one which is against X or whatever the value, you do not have to mention whether your P&L statement type is X or Y while creating a P&L account. By default, all the P&L accounts that you are going to create, system will mark it as X. In case if you have Y also, sometimes you may create another P&L account which you do not want to capture for your actual profit calculation. Certain GL accounts, certain expense accounts, or certain income accounts you may be creating, but these account transactions you do not want to capture for your actual profit calculation. Let's say here I'll put 2 to 1, something like this. Now here what we have to do, whenever you create any P&L GL account, you have to manually select whether this P&L account should belong to P&L statement X, P&L statement Y. Accordingly, system will take the profit calculations. Clear?
Yes, sir.
If you
Yes,
have to,
sir.
while creating a P&L account, you will get another field enabled on your GL screen, which means your type description, P&L statement type with a drop down of X and Y. But majorly we will not use this. Okay, if you have a
Sir,
single one, there will be no field. Yes.
sir, it will auto-populate it if we create a retain earning account.
Yes.
Okay, sir.
Sir, we will monthly basis we will assign in our yearly basis
Which
that
one?
amount. The retained earnings amount it will be there, right? Debit credit amount it will show, right?
It will show running balance, which means every time it will be updated only. It's not that it will be updated only one time, but balance from your P&L to retained earnings account will be moved only at the year end.
Only year end, sir.
Only year end, your retained earnings account will freeze the number, P&L figure.
Okay, we'll check that that GL retained earnings account GL and we updated in a balance sheet, right?
It is automatically updated by the system. We will not do anything manually to the retained earnings account. It's a manual posting entry only. If you want to adjust your profit in your balance sheet, you will be creating one more GL account called retained earnings account manual. In this retained earnings
Okay.
account manual, you will be passing some adjustment to reduce your profit or to increase your profit, but not to the actual retained earnings account, which is mapped in OB53.
Okay.
Okay.
Means whenever we post a transaction related to nominal accounts, it will be automatically updated, I think. Right, sir?
It is automatically updated. But at the year end, let's say you found that my profit is not this much, I want to reduce my profit or whatever. So you will not be adjusting the amount in the retained earnings account. In OB53, whatever you put, that GL account is not supposed to have any manual postings. So what we will do, we will create one more GL account called retained earnings manual. In this retained earnings account manual, you can pass a manual adjustment to adjust your P&L retained earnings account figure.
Okay.
If somebody is asking, can we pass a manual entry in retained earnings account? Upfront you tell no, you cannot pass. It is a strictly system driven GL account number. If you need any additional adjustment in the retained earnings account, we need to create a manual GL account and then pass the entry there. Okay.
Yes, sir.
Yes.
After this chart of account, straight away let us define document splitting. Okay, this is directly connected to your chart of account. Now to do this document splitting, we will have to go through the IMG path. Let me open SPRO, SAP reference IMG, financial accounting, general ledger accounting, business transactions, document splitting. Here let's check if we have the transaction codes. From top menu, additional information again, display key, IMG activity. If I expand this, classify GL account for document splitting, it's talking about GLT0 underscore T8G17. These are all the table related information. Okay, so this does not have any T code, but these are the T codes. FHEL underscore ACTIV underscore SPL1. These can be your T codes. But normally any document splitting related config that you do, we will be going with the IMG path only, not with the T code. Now, first one that we'll have to do here is classify GL accounts for document splitting. So here I'll put SPRO IMG. I'm not writing the T code. Clear? I'm not
Yes,
writing
sir.
the complete path also. You just need to remember there is no T code for it. You will be defining document splitting configuration using SPRO IMG path. Financial accounting, general ledger accounting, business transactions, document splitting. Now, when we do this classify GL account for document splitting, let's open this setting. It's asking for chart of account. We'll have to give chart of account, del group, DEGR, proceed inside. You'll have to add a new entry here. Now, when you're adding a new entry here, make sure you're giving the exact account groups that you have created for your chart of account. If your chart of account groups are created properly, your document splitting settings can be easily defined. Okay, these are our account groups. What I am going to do, I am going to copy all these number ranges. First, I am copying only my asset related number ranges from number to number for asset. Copy this, come back here and paste it here. Okay, before you do this, we have to understand what are these assets first. Okay, you can see both the screens. First one is 101 all zeros to 101 all lines. What is this 101 all zeros? This is your fixed asset.
Yes, sir.
Yeah.
Now, when you open the category here, this is nothing but item categories. Now, based on this item category that you're assigning for your GL account number range, the document splitting functionality will work. Now, you are going to use document splitting for the purpose of splitting the document to derive three elements. Point number one, profit center. Point number two, segment. Point number three, business area. Using document splitting, you will be deriving or you will be splitting the document to balance the transaction at profit center level, at business area level, or at segment level. Most commonly, not most commonly, 100% in every organization, we will be having document splitting enabled at profit center level. This is mandatory, and at business area level and at segment level can be optional. But profit center is 100% mandate in every organization. First one, it is all about your fixed asset. Here you need to open the item category list. You will get a drop down list. From this list, you need to check if any item category related to fixed asset is available. If yes, take it. If not, since this is asset related GL account list, you can map it under balance sheet. If you find the relevant one, put the relevant one. If not, put the balance sheet. Do you find anything related to fixed assets?
Yes, sir.
Yes, sir.
7,000.
You have fixed assets 07000. You need to select this. Press enter. It will display the description of it. Second one, 102. Second one is accumulated depreciation. Accumulated depreciation related to what?
Asset
Fixed assets.
balance.
Accumulated depreciation also related to fixed asset only. You will be charging accumulated depreciation on fixed asset. So this also will be fixed asset. Enter. Third one, 110. 110 is your cash account. For third one, open the drop down. Do you find anything related to cash accounts?
Yes, sir. 4,000.
You have cash account 4000. Select this cash account. Next one is bank 1200. 1200 also related to cash only. You can select this one also as cash account. Same functionality for cash and bank, incoming payment and outgoing payment.
Yes, sir.
Right? We'll be selecting cash account for this. Wherever you feel that I am not sure, you can map it under balance sheet. Okay, next 13 series is what? 13 series is your inventory. Open the drop down. Check anything related to inventory.
Material 6,000.
Material is there 6000. You'll have to pick this category. Next one, 141. 141 is related to accounts receivable. Open the drop down. Anything related to accounts receivable.
2,000 customer.
Accounts receivable is related to 2000 customer. Select customer. Next 142. 142 is your customer advances. Open the drop down again. Check, do you find anything related to customer advances?
Yes, sir. 2,100 customer special GL transaction.
Customer special GL transaction is related to your customer advances. Pick 2100. Next one, 151. 151 is related to prepaid expenses. anything related to prepaid expenses or provisions. If you find any relevant, we have to tag under that. If not, straight away put it
Balance sheet.
under balance sheet. So this I'll take it as balance sheet account. Next one, 152. 152 input taxes. So input tax also, check if you have any input tax account.
No, sir.
Nothing.
Why
So
the
we'll
same?
take this as. So these are normally used for our balance sheet accounts. Sorry, P&L accounts.
Okay.
Okay, so I'll take this as balance sheet account. Next, 16 is your investment. Anything related to investment? If yes, we'll have to pick. If not, balance sheet.
Fixed assets.
Fixed asset is exclusively for the fixed asset only.
Balance sheet account.
So it will go to balance sheet account. I'll pick balance sheet account. After investment, loans and advances, 17. Anything related to loans and advances or balance sheet?
Balance sheet account.
I'll take balance sheet account. Next one, 18. 18 is your intercompany receivable. Anything related to intercompany or balance
No,
sheet?
sir. Balance sheet account.
It will be a balance sheet account again. Last one, 18, current assets. Current asset also again balance sheet. Okay, now let me first save this. Otherwise, if system gives any error, we may lose the data that we have given. I have saved this. Assets we have mapped. Next, let's go to liabilities. These are our liabilities. First one is capital 21 series. Before that, I'll copy paste all this liability number ranges. For capital, do you find any relevant category? If you do not find any relevant category, straight away we have to tag it under balance sheet. Yeah.
How will we know, like, in the real-time project or when it do the project, how will we know that this will, like, how will the capital be present from the business perspective, or like how will we define, like, that okay, it can map only to this balance sheet account or like customer account or company code as such.
This is directly from the consulting side. We will not be discussing this with the client because client is not sure what is document splitting, and for that reason, as a consultant from FICO side, we will have to map this. So we have to understand if you find any relevant account group for this item category, you will map it under that. If not, for all the balance sheet accounts, you will put balance sheet. For all your P&L, you will put either expense or revenue.
And will, if business comes back saying that okay, this is mapped to wrong account, will that happen in real time, or like they, they just
No,
don't
it will not happen. This will not happen. You may find some issues related to profit center. Like when you try to post some entries, you will get some error called balancing field profit center not filled.
Okay, okay, yeah, correct,
Oh,
correct, yes, yes. Yes.
So such kind of issues will come if we map incorrect mappings here, because this will have a backend mapping in the system.
Okay. Okay. Understand.
Okay, so when I post the transactions, that time I will show these settings again. I will show how your document is being split.
Okay.
Okay,
Thanks.
yeah. Now for capital, what we will be selecting? Balance sheet account, because we don't find anything related to capital. Let's proceed with balance sheet. Second one, 221. 221 is related to retained earnings. For retained earnings, there is nothing called retained earnings here. So this will also go to balance sheet. Press enter. Okay. Next one, 222 series. 222 series is related to reserves. For reserve, do you find any relevant account item category? For reserves also there is nothing. Let's go ahead with balance sheet account. Next one, secured loans, unsecured loans, 231, 232. 231, 232. For any loans, there is no relevant item category. You have to go ahead with balance sheet account. I'll pick balance sheet account for 231, 232. 241 is your, sorry, yeah, 241 is your accounts payable. 242 is your vendor advances. 241 for accounts payable, it will be vendor related transaction, correct? And for 242, which is your vendor advances, any vendor advance is vendor special GL transaction.
Sir, in real time also we'll create vendor advances liability side.
Yes.
Oh,
This is to have proper balance sheet representation.
okay.
Okay. Next, 251. 251 is provision, 252 is tax payable, bank overdraft, income received in advance. Now, these are all part of balance sheet. None of this will have the relevant item category. Am I correct? So, I will straight away put all this in balance sheet account. Clear? Except for vendor, everything falls under balance sheet in liability side. After balance sheet liabilities, let's proceed with incomes. Let me copy
Sir,
all
one
the
minute.
income related. Yeah, 0100. Next, I'll put income related accounts. First income related account is export sale. 1, 2, 3. Sorry, first two are sales related. Only two domestic sales. Okay. Copy from here. 311 is copied. First three are related to sales. Domestic, export, intercompany. Open the drop down. Let's check if you find anything related to sales. Any category relevant to sales?
Revenue.
Revenue is a relevant one. Copy this revenue. For the first three, I am going to put revenue. Next one, 321. 321 is operating income. Next one is your non-operating income. 321, 322. Open the drop down. Anything related to operating, non-operating income? If you don't find anything, put it under revenue, because this falls under income category. Okay, nothing is there. I am going ahead with revenue category. Revenue and revenue. Next one, 331 is interest received. 332 is discount received. In short, interest, discount, commission. Open the drop down. For discount, you have the
4010.
relevant one, and interest you don't have. Alright, this is for discount. Discount is which one? 332. I'll put the discount here. So interest, I don't find any relevant one. I'll put revenue. For 333, which is commission, also I am going to put as revenue. Next one, miscellaneous, also I will put revenue. Sale of a fixed assets, also I will put revenue. Forex, you have a different forex related category. Exchange rate different, 40200, this is your forex. 341, 342, both are forex related. Last one, 343, related to profit on sales. This also will be your revenue. Copy, put it here. Clear? I'll save this one first. Are you sure want to save changes? Yes. Next, let's map our expense related this one. Copy 449. So we got copied up to 448. Let's also copy 449. Just go one level up. Okay. 411 related to direct expense, indirect expense, operating, non-operating expenses. Open the drop down. For direct, indirect, operating, non-operating, anything relevant? If there is no direct relevant thing, we'll have to proceed with expense. In short, for expense related, you have only two categories. One is your expense, second one is your cash discount, third one is exchange rate. Only these three. So, do we have any discounts here? Discount given is there, and forex
No.
is there. Only for discount given, forex related accounts, there will be a different one, but otherwise for everything it's an expense.
Yes.
So I'll take 2000. I'll put this everywhere first. I am going to update for discount given 441. Here I am going to change this to discount related GL. Cash discount, expense, revenue, loss. Select this cash discount. Next, forex 451, 452. 451, I'll take this as forex related. Exchange rate difference. 452 also exchange rate difference. Clear? Next, come down. Last one is what? Advertisement expense. Copy advertisement. Next one is your takeover accounts and secondary cost. Copy this, put them here. Pasted here. Okay, this is your secondary cost. Open the drop down, check if you find anything related to secondary cost. If yes, that one we'll have to put. If not, expenses. Secondary cost is straight away goes to your expense category. And last one is related to what? Takeover accounts. This takeover account will go to balance sheet directly. Enter and then save it. Clear? Yeah. Yes, Ravi.
Yes, sir.
Ajay, what will happen in case if we assign the incorrect group?
If we assign incorrect group, there is no harm, you can assign it, but only point is, now if you see this list, here if you see, you have balance sheet account which will be fine with all your balance sheet accounts, and expense and revenue is fine with all your P&L accounts. And wherever you have a fixed assets, you have a dedicated group called fixed asset. And when you put fixed asset, and when you see the customer related transaction, vendor related transactions, and inventory related transactions, which is your material. Okay, these things when you post any particular entry are posted in the backend, because these are all reconciliation accounts, right? Now when you are posting any document, system is going to split your document based on two parameters. Parameter number one, the GL account that you are using, and this GL account is connected to which item category. While posting any document, we need to input the account number, either customer, vendor, whatever. If it is customer vendor is connected to a reconciliation GL account again. For that GL account, whatever the item category that you are using and the document type that you are using. For posting any document, we will be using the document type. It is going to check for the combination of your item category assigned at the GL level and a document type that you are using at the transaction level. With the combination of these two, system is able to split the profit center based on your document splitting function. If we assign anything incorrectly, system may not be able to split the transaction to derive the profit center. Apart from that, there is nothing wrong in it, but it is ideal for us to create wherever you have customer, vendor, fixed asset and material. These four will have to pay attention. And the next one is your cash account.
Thank you.
Apart from these five, the remaining one you can straight away map it under balance sheet, revenue, expense. I will show practically when we are posting the transaction. If we put wrong mapping, what will happen? So we will end up getting profit center underived for the offsetting account. So you will keep on getting the profit center balancing field missing because of this error. Option number 1 is to change the configuration here. Option number 2 to change the GL account, to change the document type for your transaction. So changing the document type is not relevant, but changing the configuration in the document splitting appropriate item category is the best solution. Okay, I'll press enter. Let me save this. Now with this, we've completed document splitting first setting classify GL account for document splitting. Within this document splitting, the next one that we have to do is classify document type for document splitting. Copy this. Let's come to our Excel sheet. Second setting is classify GL account for document splitting. Here also no transaction code. Let me put SPRO IMG. This setting is very important, and this setting, let me first open this to make you understand clearly. Classify document type for document splitting. Open this. Now the first one you are telling GL account classification, second one you are talking about document type classification. Correct? Based on these two key combinations, system is going to identify how to derive the profit center. Let me open this. Classify document type. Here if you see, all your SAP standard document types will have predefined transaction and variant. Wherever you have 0000, this is a standard transaction commonly used for any document type. And if you have selected document types which will be used only for selected purpose. Let's say if I take DR. DR we are going to use exclusively for the customer invoice posting. Am I correct?
Yes, sir.
DR we are going to use exclusively for the customer invoice posting. When you post any transaction to the customer account cannot be manually given the profit center. In short, profit center field is not available for customer account. Am I correct? Customer account is GL account or sub GL account, ledger or sub ledger?
Subledger.
Customer account is sub GL or is a sub ledger. Remember, for any sub ledger account, document splitting functionality is not applicable. For any sub ledger, document splitting functionality is not applicable. When we say document splitting functionality not applicable, you are using document splitting to have profit center both on the debit and credit side. The whole idea of using your document splitting is to balance the document at profit center level also, so that you can derive the financial statements at profit center level. Now, when we say that you are trying to post a transaction to the customer account, vendor account or asset account, in short, any sub ledger account, your profit center, your segment, your business area are not directly assignable, which means you cannot assign directly profit center to a customer account, because your document splitting functionality is exclusively for GL, not for sub GL. Now, is customer GL or sub GL?
GLs.
Customer is a sub GL. Now, why we are telling customer is a sub GL? If I say a customer will have something called recon GL in it. Yes, no? Am I correct? Whenever you create any customer
sir.
master, you have to assign reconciliation account inside the customer. Is it the same case for your vendor?
Yes, sir. Assets
Yes, no?
also standard.
For asset, for fixed asset, are these 3 points correct? For customer, you will give a reconciliation account in customer master data, whether it is domestic customer, import customer, export customer, third party customer, intercompany customer. Yes, no?
Yes, sir.
Okay, in short, let me try to do something. I am giving a customer account here. When I go inside the next one, here I can see the customer account. Here I can see the GL account.
Yes, sir.
Yes, no? Now this GL account is assigned inside this customer master data. The similar logic is applicable for your vendor account, for your fixed asset account. Your document splitting is applicable only for the GL account, not for the customer account. Am I clear? Your document splitting is applicable not for the subledgers, it is applicable only for the main ledger, which means GL account. Whenever you are trying to post a document, you will have two type of simulations. One is normal simulation, the other one is a simulate general ledger. Okay, what I'll do, I'll complete this entry. I'll put 100. What I did, customer debit, I'll put 50. Now, when I try to simulate, see what is happening. On the debit side, what account number, what account name it is displaying. This is your 33 all zeros 33 mineral zone. This is your name of customer. Clear? When you simulate, system is giving you the customer name. Let me go to document, click on simulate general ledger. Is this showing a customer name, customer number, or GL name, GL number?
GL names.
GL name and GL number. Now, if I go back, it's the same document. I have not posted this yet. Look at these two screenshots. One is your, this is your simulate normal. This is your simulate general ledger. Any difference you are able to find?
General ledger showing profit centers and also sub reconciliation.
But if you look at here, look at the account number and this one. Okay, and look at this here. Are they same?
No, sir. Different account name and number.
They are not same, but is your offsetting HDFC Bank, is it same or any change in the HDFC account?
It is the same, sir.
HDFC, it is the same. GL number is the same. GL name is the same because HDFC is a GL account. Now, whenever system comes to a stage where it has found the reconciliation account or subledger account, it will convert that subledger into main ledger. When you do the simulate general ledger, it is only about your GL simulation. Debit, credit, everything GL account. Here, if you see profit center is given on both the sides, your accounts receivable is also receiving profit center, correct?
Yes, sir.
But in fact, if I go back, if I double click on HDFC Bank line item, I have given profit center field here. Am I correct? Profit center
Yes.
field I am able to see, I have filled it up. If I go to the customer line, do you find profit center field here?
No, sir.
This is your customer line. There is no profit center field. If I try to switch to more data, here also there is no profit center field. In short, for any subledger account, profit center field is not available. Your customer account, your vendor account, your fixed asset account is always dependent on the offsetting account to derive the profit center. Now, in which scenario the profit center should be derived for your reconciliation account is decided by your document splitting config. Okay, so while posting the transactions, it will be easy for us to understand this. Now here, if you try to change this from customer invoice to 0000, if you try to post the same entry, you may not be able to get profit center here. Now this is SA, but if you change with these settings, but remember, you are strictly not supposed to change these standard settings. For DR, it is by default 02000001. In short, for any customer related, it is the same. Now you are not supposed to make any change here like 0000 whatever. Strictly not allowed. But only one change that you are supposed to do here, in case if I add any new customized document type. My document type will be applicable here by default. Let's say something like this we added MD. Just assume that this is the document type we have created on our own. Any document type that you create on your own, it will be part of your setting, but it will have nothing in the transaction and then variant. You have to come here, update what kind of entries you are going to pass using this document type. Accordingly, you need to put a transaction and variant. Variant is 0001 for everything. This transaction you'll have to put according to the nature of transaction that you are going to post. If your document type is relevant for customer posting, put customer invoice. Relevant for vendor posting, put vendor invoice. If it is related to payment, put this one. If it is a clearing transaction, put this one. If any combination is not matching, system will not be able to split the document. And it will give you the error message stating balancing field profit center not filled in so and so line item. This is common error when you are working in any project. This might happen because user had selected wrong GL account or user had selected wrong document type. Okay, the actual functionality of a document splitting we will be able to understand only during your accounts payable, accounts receivable, fixed asset and your clearing transactions. Okay, anything that you are posting to customer, vendor, fixed asset and payment and clearing transactions, you can see how document splitting is actually working. On the other transactions, it is not relevant because debit credit is posted to GL account. Wherever you are posting to a GL account, if you see the profit center field editable, user will have to input the profit center. Do not expect system will split the profit center for you. That is wrong. Am I clear? Okay. Now I'll come back. Now document types, are we going to define for everything or only for the new document types that are created?
Only new document.
Only new document types will be mapped here. Otherwise, you are not going to touch this setting. Go back. I don't want to save these changes. Next one is your document splitting characteristics for general ledger accounting. Okay, this is also SPRO IMG. In this, you have to discuss with your client at what level they want to generate their financial statements. First level of generating financial statement is always company code. Company code level, I want to generate my trial balance, P&L balance sheet. Apart from company code, you will have three more levels: segment, profit center and business area. We will not be using business area. Okay, we will not be using business area for profit center accounting. We will only be using profit center and segment. So if your client wants to generate their financial statements at profit center level, you have to ensure that this profit center becomes mandatory and zero balance is enabled. at whatever the level your client wants to see the financials. In short, trial balance, P&L, balance sheet. For that level, you need to make sure that field is mandatory and zero balance splitting is enabled. Similarly, if your client also wants to see the segment level reporting, you'll have to put this one mandatory. Segment is nothing but group of profit centers. If I have 10 profit centers, if I have 3 segments, these 10 profit centers I have to map under 3 segments. Okay, now let's proceed currently with only profit center accounting. If your client is looking for profit center level financial statements, what you need to do? You need to make profit center field as mandatory. This is zero balance splitting enabled and save it. Now, any setting that you do at document splitting level is at client level is applicable for all the company codes. Now, this setting that we are doing will affect all your company codes. For every company code, profit center becomes mandatory. Now, in your practice server, the other users may be removing this. Make sure when you are posting, if you are not simulating general ledger, if profit center is not updating properly, your reporting may go wrong. Okay, if your document splitting is not working fine, first thing that you'll have to check is if these settings are enabled or disabled. If you want to test document splitting thoroughly, this is one of the mandatory settings. These two must be enabled. Once these settings are enabled, go back.
What if we select all 3 options?
If you select all 3 options, every document will have to be tallied or balance should become 0 at segment, business area, and then profit center. If any one criteria is not meeting, it will not allow you to post the entry.
In real time, do we do like this, or we have to click
No, only profit center. Profit center is 100% used. Next one, segment, but business area will not be used. Okay, now here we made profit center as mandatory. The other setting we have made. What is the other setting we have made? Zero balance. If you make zero balance splitting tick enabled, there will be one more setting here called define zero balance clearing account. This setting also is needed if you put in this setting zero balance clearing. Here what we have to do, you have to maintain a GL account called profit center clearing account. You have to come to 000 account key, standard account for zero balance, double click on accounts. This we will add later when we are testing document splitting. Here you need to create one GL account called profit center clearing account. This profit center clearing account will be assigned here, which means if you are posting a document debiting to one profit center, crediting to another profit center. Now debit profit center does not have credit, credit profit center does not have debit. Now to balance the value at profit center level, system will use this dummy GL account called zero balance clearing account. And with the help of with the help of zero balance clearing account, it will post your entry. Now this zero balance clearing account will always show zero balance. That is why we call it as zero balance clearing account. Within the same document, this GL account will be posted for the debit and for the credit with same amount. At any given point of time, your zero balance clearing account must have zero balance. Clear? So we will post entries and then practically see what is happening with all this in the document splitting. Stuck. After this, next setting that you'll have to do is activate document splitting. This is very important. If you go to this activate document splitting, here we have to ensure this document splitting is ticked. If there is no tick, your document splitting is deactivated. Whatever the settings that you make in document splitting, if this tick is not there, are not going to work. Okay, this tick is mandatory, and splitting method that we use is 12 in all the projects for all the companies. This is standard splitting method at 12 will be used. And in your interview, they will ask you which splitting method do we use. Okay, strictly you have to tell only 12. And here it should be active, inheritance should be enabled. Nothing else we will use here, even in real environment. Clear? Even in real time, this is how it looks like. Splitting enabled, inheritance. In case if you want to deactivate, or if you don't want document splitting for any of your company code, you're not supposed to deactivate complete document splitting, because this is client level setting applicable for all the company codes. For any reason you don't want this document splitting enabled, you will have an option called deactivate per company code. You need to double click on this, select your company code, you can keep it inactive like this. Clear? People might ask this point also in your interview, how do you deactivate or disable document splitting for a particular company code? This is how you will be doing it. Okay, this is another setting. Come back. I'm not making any change here. Next one. That's it. So after this, there will be some additional settings under extended document splitting. This extended document splitting we will be discussing when we are actually on the document splitting topic. Okay. It will create unnecessary confusion if we talk about this now. Once we see the actual data flow of your document splitting, how it is exactly working, if you want to do any kind of modifications, let's say you may be passing a particular entry which is not allowed according to standard document splitting config, then you have to allow certain transactions to be split. In such scenarios, you will be playing with this extended document splitting functions, so that wherever system is not able to split the transaction, you will allow system to split it. Not every transaction can be split according to document splitting. You have a lot of settings here. Based on all these settings only, system is going to perform your document splitting. If anything is wrong, it is not going to split properly. You have to check what document they are posting, and in short, you'll have to go to a level where you will be able to understand what is the nature of posting that your client is doing. First of all, is that correct posting? Accordingly, you have to make certain changes or relaxations in the system standard configuration. Clear? Now, these two
Yes, sir.
are your major configurations in your baseline config. If these two are properly defined, rest everything is straightforward. Simple 5-10 minute configurations in your baseline. But make sure you are not creating 4-5 account groups. Create a minimum 30 or 40 account groups. Only then you will be able to practically see, practically understand what is happening in the system. Clear?
Sir, every document we need to select profit center. Like
You will not
expenses,
select
GL.
for every document. Based on the nature of transaction, whenever you are giving GL account, you have to put profit center.
Okay.
And whenever you are giving any customer account, vendor account, fixed asset account, even you are ready to give profit center, there will be no field called profit center, because those are sub ledgers.
Yes, sir.
For sub-ledgers, this profit center accounting is not active or not applicable. So that is why you will find another simulation called simulate general ledger. In simulate general ledger, system is going to replace your sub-ledgers with main ledgers. Customer account is replaced by customer reconciliation account. Vendor account is replaced by vendor reconciliation account. Asset account is replaced by asset reconciliation account. And accordingly, it will take the profit center from the offsetting accounts.
Okay, sir. Understand.
Yeah.
Actually, in live environment, when the end user doing the posting, profit center will pick automatically, right? So we don't give
No,
the manually.
it will not pick. If it is picking automatically, then there is a configuration.
Actually, the thing is, I'm using the SAP in my current organization. So when I'm doing the posting, so we don't give the profit center manually. It will pick automatically.
So here we have to maintain settings.
Okay, okay,
If
understood.
you put here, then whenever you give, now if you see it, whenever you give GL account, your profit center will come, not with customer account.
Okay, okay.
Only it will apply for main ledger.
Yes.
Yes.
So
So
how
one
this
more
is
doubt, sir.
different from OKB9?
Yes.
So here we cannot give the rents, I guess. And this is the difference.
No, here this is not for profit center. Here it is only for cost elements.
But we have a column for profit center, right?
But profit center with combination of what? Cost element?
Oh, no, this is cost center, I guess.
This is cost element.
Yes.
Okay. For cost element, if you give cost center, profit center is automatically taken, but you have something called revenue elements, income related accounts.
Yes.
For income related account, you will be assigning the cost element category as 11. Revenue accounts. In short, for any income related GL account, cost center cannot be used. For certain income related cost elements, if you want to default profit center, you'll have to do it here. You see, wherever profit center is given, cost element is blank,
Yes.
because cost center cannot be used for income related GL account. If your GL account is not a cost element, you want profit center, you have to use FAGL 3KEH. This is again dependent on the nature of account that you are using, nature of transaction that you are posting. Clear?
Sir, it is
Yes,
regarding
sir.
the retained earning.
Yes.
If a company has 20 company codes and we want to know what is the retained earning account for one company code, then how is it possible? Just because
You are
we are
assigning
creating
retained
only.
earnings account at chart of account level, correct?
Yes, sir.
Now, when you are going to post your transaction, we are going to post the transaction at company code level.
Okay. Yes.
Okay, one company code will have only that company code related transactions. When you pull the retained earnings account, you cannot pull the retained earnings account at group level. You can only pull the retained earnings account balance at company code level only.
Acha. Okay, sir. Got it.
Okay, let's say if I post any transaction, I must give in which company code this transaction is updating.
Yes.
If I pull any report, I must specify from which company code I want the data.
Yes, sir.
If I pull any financial statement, I must specify from which company code I want the data.
Yes, sir.
So straight away you will get data of that particular company code only. There is no point that it will club the other company code information. That is not possible.
Okay. Yes, sir. So another
Okay.
thing, yeah, yeah. In the real time, do we need to create any extra documents for document splitting? Do this type
Extra
of
docu
yes, sir.
extra document type you mean, or extra? I didn't get
Yeah,
your
yeah.
point
Document
clearly.
types. Yes, sir. Document types.
We will be creating multiple extra document types in real time for different purposes. Because document type, the whole intention is to identify the transaction. Let's say I posted some 100 transactions. I want to classify what are these 100 transactions. How many payments are there? How many invoices are there? How many credit memos are there? How many month-end adjustments are there? How many provision entries are there? Correct?
Yes, sir.
This classification I am not going to understand by the document number or by the nature of transaction. Simply I will put a filter on my document type. So your document type is
Okay.
only used for restricting certain kind of transactions and for better reporting purpose.
Okay, sir. Thank you, sir.
Yeah.
Could you open that ABL3N once again?
Don't use FBL3N in S4HANA. Use only FHELL03.
Okay.
Okay.
So here, if we give the return earning account in the GL account tab and in the
It will
company
not
code,
give any value.
then how we can check the in FS10, I guess I can get the return earning value, right?
In FS10N also you will not get. Only when
Then
you do the balance carry forward at the year end, it will freeze the number.
okay. So
Otherwise,
individually we
every day
can
you are
get the
posting
value.
entries, right? That anyways, I am going to show you once we start posting the entries. I am going to show you how your retained earnings actually works, and I'll calculate profit manually. I will show you the retained earnings account where you will see the balance. How system is calculating the profit, how we are calculating the profit, whether our profit system profit is correct, how this is represented in your balance sheet. I'll practically show you on the system. Okay,
So
for
one more
that
question
we
regarding
need to
return earning
post
account.
some entries. What is it?
Actually, for a company code, I didn't create any return earning account, but in OB52 I did the setting. Sorry, OB53 I did the setting, and I prepared the financial statement. There I was able to get the profit in balance sheet. So even I didn't create any return earning account though. So how the
It will not,
data?
it will show the profit, but it will not show that profit under any GL account.
Yes,
You will
that is
find
right.
something called non-assigned accounts,
Yes, yes, yes.
because your initial setting itself is accepting that entry without creating the GL master. It is telling you are assigning this number, but this GL is not created.
Okay.
So that is why whenever you create GL master, first GL that you are supposed to create is your retained earnings account. Otherwise, we will forget it.
If we don't create the return earning account, then what are those errors we are going to get in SAP?
No error. First of all, that is a big mistake if you are not creating. Nothing will happen. It is not going to stop you anywhere. Only on the balance sheet, it will not show your retained earnings account in the proper representation.
I'm not very sure, but I guess we will be having some errors while doing asset accounting. Is it right
No,
or
wrong.
okay, sir?
This is nowhere connected to asset accounting.
Like year-end closing activities, we will get an error or it will accept.
For you to do year-end closing, you must have created retained earnings account. Without retained earnings GL account created in the company code, we are not supposed to proceed to the year-end activity. Before you do any year-end activity, any month-end activity, any cutover activity, there is a checklist, prerequisites.
Okay.
Only if you meet this checklist, you should proceed. Let's say if you talk about month-end activity, if somebody is posting entries, can we start doing month-end activities?
No.
Why? When you are doing month-end activities, strictly there is no data entry. Data entry must be freezed. Yes, no? If you are not freezing the data entry, you are proceeding with the month-end activities. Whatever the calculations, whatever the manual provisions and all you are posting will be wrong. Am I correct? Those who are from the core accounting?
Yes, sir.
Alright, system is not able to capture the right figures if your data entries keep on going on. So that is why before you start month end, you will freeze the period. You will inform all the users from tomorrow onwards there will be no data entry in this period, and nobody is supposed to post any entry once the period is officially closed or officially announced. There will be an email communication in every organization stating period, let's say April will be closed on May 4th or May 5th or May 7th, any date. An official email communication will go to all the departments or all the users of the company. So having seen that email, if somebody is posting a transaction, it is their mistake. Clear?
Yes, sir.
Yeah.
Sir, it
All right.
documents fit in company code level, right?